Hello everyone and welcome to this episode of Skipton Talks. Today I'd like to welcome Richard Dana, the founder and CEO of the digital mortgage platform Tembo. Welcome Richard.
Welcome, great to be here.
Thank you for coming up to Skipton on what is a cold and brisk day in the north, so appreciate you taking the trouble to come and see us. First of all, let's set the scene. Tell us about Tembo. Who are you and what's your vision?
Yeah, so Tembo is as you said, a digital mortgage and savings platform. And we're really focused on helping first-time buyers to buy their home sooner. So that's our kind of core mission. Mm-hmm. And really what we specialise in is helping customers find a way when they might be struggling with affordability or when they might be struggling with a deposit to really, get that foot onto the property ladder that they might not have been able to do. And around, 70 to 80% of our customers have been turned down by a broker or a lender before they come to us. So that's kind of our core thing. How we do that, we've got a number of ways we do that, but one of our real specialisms is focusing on family mortgages. So looking at ways to help families to increase affordability. Obviously, the traditional way for Bank of Mum and Dad is handing over cash, but we're really focused on the other ways. So how can you add income? How can you leverage property to increase affordability, to give customers really that leg up onto the property?
Okay, so the family dynamic is quite interesting. First-time buyers particularly, and I'm interested in kind of broadening that out into the family conversation. For us, we've got a laser straight focus on first-time buyers. That's no surprise. That's kind of what we talk about most of the time in the industry. But why specifically first-time buyer for you guys? Well, there are a number of sectors. There's the remo sector, there's the buy-to-let sector, there's the next purchase sector. Why first-time buyer in particular?
Yeah, I think it's a good question. So the main reason is it's a huge pain point. If you look at the data, 30 years ago, there were about 500,000 first-time buyers each year. Mm-hmm. The population has grown by about 15% over the last 30 years. We're now averaging about 300 to 350,000. Right?
Okay.
So the number of first-time buyers has dropped by about 30% a year on average. So there's this issue where each year there are about 200,000 people who would like to buy a home who are unable to. And that's really our core focus, is how can we help those people to buy a home? I think the other, why shouldn't people rent? There's a lot of other things, whether it's videos, whatever, people like renting is better. Mm-hmm. I think the reason why we think it's really important to rent, and presumably as a building society, you guys do, people to buy, as a building society, you guys do too as well, is that people that own, all the data shows, people that own over a medium long-term period of time are much better off, £200,000 on average better off, than people that rent the very same property. So actually, by giving people the opportunity to really get that leg up onto the property ladder, we can then help them build wealth in their lives.
Okay, that's interesting. And when you bring the family part into it, and I'm genuinely curious, how do you engage with your potential customer, your potential first-time buyer, and how do you bring the family conversation into that as part of your sales process or your advice process?
Yeah, so we're a digital business. So we have a digital fact find, which is pretty unique in that you can bring in up to 4 family members into the fact find. So we can do full affordability. Okay. We've built our own underwriting technology. We can do full affordability, and it can be for you, it can be for your parent, it can be for a relative, and we bring them in. So we can do affordability for a standard mortgage on your own, and then all the other options, whether that's an income boost, or it's leveraging some property equity, or it's doing shared ownership. There's all the different things come out of the affordability. So that's the first thing, is it's there kind of guiding people through in the digital fact find. Mm-hmm. The second thing is, though, we target both the buyers. About half our customers come in as a buyer, but actually much better is if we target the boosters. Okay. So people over 50 who are looking to help family members to buy a house, we can convert those customers at about 3 times the rate than we do a buyer. So there's a lot of kind of pressure on first-time buyers. Actually, if it is put on a plate with them from their family members, it's much more likely to convert than if the child just goes and asks.
Fascinating. I guess our industry is all about stories, isn't it? And you kind of given me some insight that I kind of probably hadn't appreciated over recent times. But is there a story or a particular case that springs to mind where your solution has been able to help their home buying aspirations?
Yeah, so we are pretty obsessed with the reviews. And we had a new guy started about 6 weeks ago, and he was like, oh my gosh, I've never seen anyone a company so obsessive over the reviews.
Okay.
So most of them are good. If they're bad, they're even more
okay,
obsessed. So we're obsessed on the reviews. So we have a lot of customer stories that we like to look at. And I think one that sort of comes to mind for me in recent times was, we have a pre-purchase savings business where we help people get mortgage ready and we help them save and we give them a goal. So you start up and you get a goal. This is how long it's going to take you to buy. And we also do a lot of work with people working in the NHS, and we offer our service free to people in the NHS. So we had a nurse who started saving about 3 years ago with us. She had a lifetime ISA and her goal had got down to about 5 years. And then she started looking in the mortgage tab and she kind of discovered, actually it ended up being a Skipton income boost, but she discovered the idea of an income boost, right? And the issue, as you know, with a lot of these products is ignorance. No one knows they exist. They look at it and they're like, this feels too good to be true. So she went and saw on the calculator, look, I want to buy, I think it was 200,000 and she could only afford 150.
Right.
So she then went and asked her mum. Her mum looked into it, they contacted us, we had a call, and her mum ended up giving her that boost for 50,000 affordability. So she's actually able to buy the house within 6 months, not within 5 years. So first, satisfying that you've helped someone buy their house sooner. But I think the thing that was doubly satisfying is her monthly repayments on the mortgage were about 20% less than what she'd been paying in rent. So not only are you helping them buy, you're also helping them save on their monthly costs too. So that's obviously quite a kind of nice story.
All right, fantastic. Yeah, we had a case actually, it's very similar, NHS worker, single parent who was in rental. I think I'm going back about 18, 20 months now. And when we launched the track record product, she was able to transfer from rental in the same property. So she bought her rental in the same property and saved about 20 to 30% of her monthly outgoings in mortgage payments versus rental. A great story, fantastic stories, and hopefully many more to come. I got a bit of a soapbox thing going on at the moment about in my view, lenders should be challenged more to innovate in the market, particularly around helping first-time buyers. They're a crucial sector for the home buying cycle to exist, in my opinion. What's your view on lenders' innovation? Where are you seeing it at the moment?
Yeah, well, as we've talked a bit about income boost, I think that's a really big area. So when we set up the company 4 years ago, there were about 10 or 11 providers. There's now about 20. And businesses like Gen H, startup business, they've kind of come in with a lot of innovative products, but that's actually then spurned on a lot of the larger businesses like yours to actually then innovate. And I think there's a huge opportunity with the income boost to continue and to develop that product, because what we see is actually people after the first 5-year fix, the boosters come off. Right?
Okay.
So it really is just giving people that leg up to get established onto the property ladder. They might be early on in their career, so they get a pay rise or promotion. They can build some equity in their home. They don't then need that boost forever. And I think one of the things that's hold income boost back quite a lot is the upper age limit, or the 25-year age limit. So actually, you guys have increased your upper age limit from 70 to 80. That's had a huge impact. But there's a lot more that can be done in thinking around, let's not treat income boosters in a traditional way that we would for a normal mortgage. Let's think of them as people that just they just help on the mortgage until it becomes affordable by the buyer themselves, and then they can be stripped away. And I think that would really change the dynamic, because you then wouldn't be so restricted on age.
Right. So it's a temporary transaction for 3 or 5 or 7 or 10 years, I guess, but it's a temporary transaction and it's only relevant to the period of time where they're engaged in the borrowing process. Okay, that's quite interesting. So lenders, for me, we should be innovating more.
Yeah.
But I guess going back to your the conversation about the NHS worker who was able to buy their home, for me there's a bit more education required, and lenders have a role to play, absolutely. But I'm interested in where you think brokers should play more of a role in educating the consumer, maybe before they start their home buying process or before they start their home buying their home buying journey, and maybe in the communities in which they operate. What's your view on education of the potential customer?
Yeah, well, there's obviously a big gap, outside of brokers. There's a massive gap in financial education in the UK, and that's kind of a long-term thing. I think the sort of the notion of a mortgage is that it's quite transactional.
Yeah.
So often people come in when they're kind of offer accepted and you go like that. So there is this huge, area of, the FCA is looking at financial guidance. How can we help people get mortgage ready? Our business, we have this app where we help people kind of get ready, improve their credit, do savings, all that kind of stuff. And there's huge amounts of opportunity to do that. But I also think, both brokers and also lenders have an opportunity to help educate people on things they don't even know about. So, for example, with your membership base, I would imagine a lot of them are relatively old and they're very, very loyal to your business. How many of those people know about all these products that you offer? How do they genuinely know about Income Boost and actually how that works? It's not just a bit of jargon that they see in an email. Could you educate those people? Because actually, we know that half of first-time buyers, whether you like it or not, are supported by some sort of family. If you can educate those people, that's actually a real way to drive. We know that first-time buyer support from family works, right? If we can further to educate your member base who've really listened to you, that's a real opportunity to kind of grow the market.
Okay, that's interesting. So in that, I'm going to say younger demographic, and I know that most people are younger than me, so we'll accept that. We'll accept that. But in the younger demographic, I think when I was growing up, it was a society expectation that I would want to buy my first home as soon as practically possible.
Yeah.
In today's society, do you think that desire and that want is still prevalent in those consumers who we believe should be starting to think about buying their new home?
Yeah, I think the desire is still there, but I think if you're going onto a mortgage calculator and you earn, what's the average wage, 25 grand, and you do 4 times that, and it's coming out 100,000, and you're looking at mortgage, house prices of 2, 3, 400,000, and a lot more in London. You're going to be completely disengaged with it because it is so far out of reach. So I don't think the desire isn't there. I think it's just people are like realistic. And they're saying, if I'm going to not be able to buy for 20 years, I might as well just spend some money and go on holiday because it's just so far away. So I think there's kind of such a structural issue. But I do think that what we've found is actually by getting people to start and kind of not think too much about how far it is away, if they get in the mindset, actually you can do it much quicker than you thought, as we kind of demonstrated with that, with the case study.
So rather than just do the calculation, I'm never going to be able to afford that, back to the conversation about educating the consumer and lenders innovating.
Exactly.
We absolutely need that to continue. Okay.
And I think also by, if you think of bank of mum and dad, it's traditionally cash. If you broaden that out, Income Boost, you don't need to have lots of excess cash to do an Income Boost. You can actually broaden it out to a much wider group of people that would never have even considered helping their family. And they might have an income, they might have a pension, and they can just help them kind of give them that leg up. So they're not actually handing over any cash. Obviously, there's a risk to them. But if you trust your relative and you're willing to take that risk, it's actually a really effective way of providing support without handing over cash, which you might not even have.
Last question.
Yeah.
Magic wand time. If you could wave your first time buyer magic wand, what would you do?
There's a lot of things I would do. I think, always trying to stay out of the politics, but going to completely, contradict that. I think something that could have quite a big change would be the changes in the tax. So I think if you got rid of stamp duty and replaced it with a more kind of annual type land tax, which would be, a base level land tax on property, what that would do is it would free up the market. So at the moment you have a lot of downsizers, for example, who don't want to move because it's too expensive. If you get downsizers to move, it kind of gets things moving in the whole property market. It might also free up capital that could then be passed on to the next generation, right? So I think that's one area that would really improve. Also, by having a land tax, you then would also free up the 700,000 empty homes, right? So if we're building, 300,000 a year, and that's at a push, if you can suddenly help to free up a portion of those 700,000, right, which are already there, you don't have to build on any fields, the houses are there, they're just empty, then you can really start to get things moving. So I think a change in the way the taxes are done would reduce the friction in the transaction, so it could be much more fluid, and I think that would have a big impact.
And if you've got more stock, more housing stock available, then we're not necessarily artificially driving up.
Well, we can see from during COVID, the stamp duty holidays had a massive impact on demand. People really don't like paying that money. If you're buying a house and you have to hand over 20 grand just for for nothing, people then think twice about moving. So it just seems like a really counterintuitive tax to me.
Perfect. Well, let's hope that we get something in the not too distant future.
Yeah.
Thank you, Richard. Thank you for coming and joining us in Skipton today. And thank you, everyone, for watching this episode of Skipton Talks.